Welcome back to Rockstock Channel. It is Monday, June 24th, and we're recording the latest installment in our Getting to Know You series from Las Vegas, about to attend Fast Market's 16th and flagship Lithium and Battery Materials Conference. Over the past 2 years, Lithium Rush, the RK Equity Scoreboard, has grown from some 50 companies to over 150. It was hard to keep up with all the new listings last year and in 2022. Over the course of this year, Rodney and I have been spending time reaching out and getting to know a number of these stories and picking some we think you might also like to get to know. Next up is Century Lithium, previously known as Cypress Development. To be clear, Rodney and I are not strategic advisors to, nor invested in, Century Lithium. And of course, we're not financial advisors, and nothing in this video should be considered investment advice. Please do your own research and read the disclaimers in this video. As always, we begin with a summary synopsis of some key company attributes. Looking at the RK Equity Scoreboard, Century Lithium trades on the Toronto Venture Exchange, ticker symbol LCE.V, and also on the OTCQX exchange, ticker symbol CYDVF. Century Lithium has a market cap of about 47 million Canadian US dollars, equivalent to 37 million US dollars. In terms of project type and location, Century Lithium is focused on Nevada sediments and have been collaborating with Koch Technology Solutions. Century Lithium has raised 37 million Canadian dollars since 2021, raising $19.5 million at $1.25 a share in March 2021 and another $18 million at $2 per share in March 2022. The company currently has $12 million in cash in the bank as at Q1 2024, having spent $25 million to date. Century Lithium has several sell-side analysts covering them, including Noble Capital, Alliance Global, PI Financial, and Hallgarten, with prices ranging from $2 to $3 a share. If you'd like to receive any of these reports, please email us at rockstockchannel@rkequity.com. And with that, welcome Bill Willoughby, CEO of Century Lithium. Please start with a bit of your background, and then Rodney will dig in with some questions.
Great. Thank you, Howard. Appreciate the time to be on your channel and tell you more about our company and what we're doing. Century Lithium, as you mentioned, was formerly Cypress Development Corp. We've been into the development of an extraction process for lithium in Clayton Valley, Nevada. Working on that since 2017. We brought along a lithium clay deposit from the point of identification, resource definition, did a preliminary economic assessment in 2018, followed up by a pre-feasibility study. And we just completed in the last month a full feasibility study using Wood Consultants LLC out of Canada as our engineers, also with global resource estimate engineers, and doing the resource base for it. And that just came out in the last month. So we're advancing our project. Our next step for us is going to be looking at permitting and carrying that forward. So it's an innovative process. We're looking at a couple steps forward to make lithium out of the clay. It's an extraction process, which is end to end. We start with lithium clay in the ground, and our end product is going to be a lithium carbonate, which we produce on site. And that's really the appeal of lithium clay deposits, is being able to get to that final product. So
that's great. Thanks, Bill. Just looking, you've got extensive experience in your past in the natural resources sector, and I see others on the board have as well. Can you tell us how your board came together and how long the broader team has been working on the Clayton Valley Lithium project?
Well, as I mentioned, we started out in Cypress Development Corp. Cypress Development has been around since the 1990s. We have 2 board members that are still carried through all of that early years of the company. We only really took off as a lithium company in 2016 when we acquired claims in Clayton Valley and began staking there, followed by drilling. I came onto the board in 2017 We identified some leaching processes and metallurgical work that needed to be done that carried us through to the PEA level. And in 2021, we added 2 more board members, recognizing that the direction of the company had to be towards a larger project. So we added our current chair, Brian Disher, and Ken Owen is on the technical committee. He's ex-Anglo De Beers on the project side. And then last year we added Dr. Corby Anderson out of Colorado School of Mines, Harrison Western Chair of Metallurgy there. And that rounded out our team, or the board members, are James Pettit and Don Myers, who go back to the early days of the company. We have transitioned from being a small exploration-oriented company into a project developer. And we are one of 3 companies now that are focused on lithium clay in Nevada and have a feasibility study behind them.
That's great. And the project is located close to Albemarle's Silver Peak. What attracted you to this project and this specific location rather than other opportunities that were out there?
Well, my technical team, who includes Todd Fayram, he's our Senior VP of Metallurgy, and Calmback is our Technical Services Manager, our Project Manager, Adam Knight. We have been working on this project since 2017. In 2017, we were looking around for different assets to go work on. We more or less fell into a project that Cypress had up near Eureka in zinc. And through that, we became interested in what Cypress was doing in Clayton Valley on the lithium side. We saw the drilling that was being done, the lateral extent of the deposit. The lithium clay deposit in Clayton Valley is quite extensive. It runs for over 3 miles along strike, good width to it, very shallow lithium clay at the surface. And the initial drill holes on that were quite interesting. They were 1,000 ppm lithium content, which equates to about 0.5% of lithium carbonate equivalent in the ground. So we could see the size of it developing. We could see the route to get to an actual project through metallurgy. Material was leachable. We saw an avenue that we could go and pursue to get to a lithium product. So we became interested, began doing bench scale tests. And from there, we progressed on to a pilot program we started 2 years ago when we came into additional funding, and been working on that. Have about 2 years of pilot plant experience working in Amargosa Valley, south of the project, and that supported our feasibility study.
And Bill, if we look at your capital structure, there's a limited number of shares in issue, and there are no warrants outstanding and very few options. So it's quite rare for a TSX venture company. How is it that you have managed to keep the capital structure so disciplined?
Well, we've been very judicious in our expenditures. Prior to 2017, the company had done small amounts of raises, almost sustaining themselves, and finally getting into the lithium boom as it was taking place in Nevada. We used that startup and were able to finance our way through the PEA and get to the PFS level. And with that PFS, we did our first raise. As Howard mentioned, it was at $1.25 a share. And we raised about $18 million on that raise, and another one following that in 2022, where we raised additional funds, and that was at $2 a share. So we've been quite selective in how we raise money. We've been working off of those 2 raises since 2022. That's carried us through a lot of engineering, some permitting work, the pilot plant testing, and now the feasibility study. And we still have money in the bank, which we're being very careful with.
Yeah, that's great. And just onto the project, which is 100% owned, I see, is you have a water rights permit in the Clayton Valley Basin. How rare is that? And is the existing permit sufficient for the planned production volumes that you've got in phases 1 through 3?
Right. Well, start out by explaining what phases 1 through 3 are. Phase 1 is what we scoped out in the feasibility study as our initial startup period. We had designed that around a mill feed of 7,500 tons a day, and then expanding that through the operations cash flow, not going out for new financing for it, but through subsequent funding out of the project to a phase 2 expansion, which would take us to 15,000 tons a day, and then a final phase 3 expansion, which would take us up to 22,500. And in the course of that, we'd be progressing from around 13,000 tons a year of lithium carbonate up through 27, and then finally over 40,000 tons a year of lithium carbonate produced in that phase 3. Water rights. Yeah, we have a sufficient water under our purchased water rights to get us through phase 1 and 2. The phase 3 expansion, we would need to get about 50% more water. We've got some ideas about how we go do that, but that's several years out. That's probably around year 8 or 9 of the project. How much water we need is not much. We amount to about 900 gallons a minute is what we require under the water balance of the feasibility study. That's not a whole lot of water, really. That's sort of like a couple pivots in agriculture. But water where we are is very tight, and we have to carefully acquire our water rights, which we did. We have sufficient water rights for those first 2 phases. And we actually have 1,100 gallons a minute under our water rights. We'd need somewhere around 1,500 or 1,600 in that phase 3. But water rights are very tight where we're located. It is a rare acquisition for us. And water is very important and carefully monitored in Nevada.
Okay, and you mentioned earlier your pilot plant. If I'm correct, that's in its 3rd year of operation now, using a chloride-based process. How is that performing? Have the results improved over time? And if you can also just speak about the testing of the material, I believe with Saltworks to get battery-grade carbonate, you've been getting battery-grade specs. If you can just give us a sense of how big the sample sizes were of those tests.
Well, our pilot plant, yes, has been running for 2 years now with completely safe and clean operation. It's a good demonstration of what the process basically looks like. It's a chloride leach, so we use hydrochloric acid heated to leach the clay in the first extraction stage. We do a neutralization step where we bring the pH up using sodium hydroxide. That's a co-product of the chloralkali process along with hydrochloric acid. I'll explain how that evolves in a moment. We do a filtration step to get the solids and the liquids separated. And from there, we make a filter cake. That's our final tailings. The solution that comes off the filter press goes over to our direct lithium extraction area, our DLE area. That's essentially an ion exchange step that includes a couple other membrane steps along with it. And from that, we make a purified solution. That's all down at the pilot plant. That solution's enriched in lithium. We've been shipping that up to Saltworks in Richmond, BC, where they've been doing the test work to produce lithium carbonate. We've done, I think, about 4 or 5 trial runs with Saltworks and making lithium carbonate with them. And those results have been very encouraging. Battery quality is generally regarded as 99.5% lithium carbonate purity in the industry. We've been well above that in those trials. The product sizes are relatively small in those runs. We probably produced maybe 30 kilos of sample grade material, lithium carbonate. But the pilot plant itself runs at about 3/4 to a ton per day. And we run on a 7-day on, 5-day off schedule, continuous operation. So we've treated a lot of clay material, probably close to 400 tons over the last year and a half, 2 years in the pilot plant of steady operation. We have more that we're going to run and fine tune a couple areas. We've done a lot of improvements in the operation. We've eliminated certain circuits we didn't need. We've improved the process. We've added some to the tail end of the downstream processing, which has been able to make a nice clean lithium chloride solution for final product. And we've been very successful at doing that.
And if I look at the project, it has a low strip ratio and it doesn't need drilling or blasting. Can you elaborate a bit more on the other ESG credentials of the project?
Yeah, well, it is, as I mentioned earlier, a shallow deposit occurs right at the surface. We will mine that using virtually quarrying methods. What's called a cold planer, which is almost a continuous miner, which will windrow the clay, let it dry out in a pile, which will trail the excavator, and we'll convey that material over to our full-scale operation, our leach plant. The plant, as we've developed it, this chloride process, uses saline water, so that's sodium chloride solution. We put that into a chloralkali plant, which electrolyzes that solution. And from that, we make the hydrochloric acid and the sodium hydroxide, two products we need for both leaching and neutralization. So right there, we have a process which is developed with the local hydrologic environment in mind. You mentioned Silver Peak. That's a long-standing lithium brine operation, which has saline brine, source of the lithium there. So we can use a saline brine in our process. We can also acquire locally derived salts to run the process. And that means we don't have to bring in sulfur to use a sulfur burner. All our reagents are produced on site, and our only products are ones that we're going to sell from the project. We have the ability to use renewable resources and energy. The area is going through a period of solar and geothermal development, and we'll be able to tap into those resources as they come online. And our process mainly uses electric power to run the chloralkali plant, electrolysis. So in that, we're able to predict what supplies we'll need in terms of power. And the whole bit of scaling up is based around the power needs and availability of renewable energy for us. So those are good credits for us. It's a clean process. We don't use much water. The tailings are benign. The whole operation should be quite environmentally efficient.
You mentioned renewable power availability potentially, and you're right near Silver Peak. How established is the access and power and general infrastructure around where you're located?
Well, with respect to Silver Peak and the local industry that exists, it's very well developed. They have the power supply they need, they have the water, they have the road access. We're just right off of Highway 95. It runs through Tonopah and Goldfield. So the main highway arterial for that part of Nevada is just nearby, and we have a paved road which comes almost right up to the property. For the scale of operation that we're envisioning, yeah, things could be better. We could stand with a better infrastructure in terms of road access. It'd be great if we had natural gas to the valley, but we don't. It'd be great if we had rail. The closest rail is about 100 miles away. Those are things that if we're successful down the road and the operations around Tonopah develop, that infrastructure should build out. As far as the power infrastructure that exists right now, we are hopeful that a major power line will be developed, and that's called Greenlink West. And that power line is a 525 kVA line, which Nevada Energy is putting in. It goes between Yerington and Las Vegas, runs right by our project. And if that comes to pass, which we think it should, there'll be a lot of solar development, geothermal development right in our area. So looks like a promising area for developing a new lithium mine.
And if we move on to the feasibility study findings, the project has an OPEX that's just over $8,000 a ton, and then this drops to sub-3 when byproduct credits from excess sodium hydroxide are factored in. So on that kind of number at sub-3, it should make the project robust across even extreme lithium pricing cycles, which we are having, but that would be very much on the low end. The issue, as I'm seeing it, that needs to be overcome is the high initial capex and its impact on internal rate of return. LAC faced a similar issue with its numbers, but it secured a substantial amount of DOE funding. Is this something that you're looking to replicate, to help fund?
Yeah, well, we most certainly have the DOE and DOD funding in mind. What lithium means for the U.S. and a deposit such as ours in Nevada, it's a secure source of supply. It's an end product that we can produce on site. We don't have to produce a concentrate, which would be shipped overseas. So the end-to-end aspect of lithium clay deposits is quite appealing. In terms of capital cost, yeah, you're quite right. We do have a heavy capital cost up front, but through the just factor that we've got the sodium hydroxide potential sales to offset a great deal of the operating cost, the overall costs side of that are pretty predictable. We can foresee that down the road this would have a low OPEX. So it's a trade-off between what's your operating cost and what's the CapEx going to be. Our phase one development, if you look at the plans that are in the feasibility study, includes the footprint and all the infrastructure for the phase two build out. So we're a bit heavy on the CapEx side for our phase one as it was laid out in the feasibility study. It was $1.5 billion. We had another 600 million in there that would take us through the phase two and get us up to what was our actual design rate. That was really the focus point initially in the feasibility, that 15,000 ton a day rate. And that number, if you started out with that scale, it produces an attractive rate of return. If we started the project at 15,000 tons a day, we'd generate better than a 20% rate of return. With the phase one and phase two broken up, we did that to offset some of the CapEx, some of the risk, and that's why we went to this phase one, phase two layout. And with that, we still produce a healthy 17% rate of return. There's a bit of a trade-off there, but you're cutting your lithium production and overall economics take a bit of a hit, but you're making up for that in risk. What we probably will do now is take a step back and look at that phase one and phase two together. Total is being around $2 billion. Lithium Americas came in with a government loan for better than $2 billion. Seems like a terribly lot of money, but things are more expensive these days, just generally. We've seen that in the last couple of years since COVID. So we will definitely have in mind going through the DOE loan program and talking to DOD about what sort of things might be envisioned. And at the same time, we're looking at that phase one, phase two CapEx and seeing what we can do there to rein that in a bit and come up with a viable commercial plan that gets us off the ground and running. But yeah, we do take a big hit on the capital, make up for it on the operating side.
And I guess, Bill, that would also, given the low OPEX, would give some comfort to someone to give you that sort of scale of loan, because it should be robust through the ups and downs of the market. At that number, you would be very much a first quartile cost.
Right, and we see that support out of the byproduct sodium hydroxide sales as being one avenue to give you that support through downtimes. I mean, we just look right now where the price of lithium is today, around $13,000 a ton. A year ago, it was close to $80,000 a ton. So we've seen prices move way up. We've seen them come right back down hard, and I think probably have overcorrected. But any commodity that we source offshore the way we do, it's going to have that type of ups and downs to it and supply disruptions. And I think that's something the U.S. is very conscious of, and I think we're going to continue to get support for the project as we move ahead that way. On the sodium hydroxide sales, we see that as a very solid market. Market in Western U.S. relies heavily on imports. Imports of caustic soda are only going to get more expensive as chemical shipping gets more expensive. So we see a good base support, amounts to only about 20% of the sales, could maybe a bit more for the project and the cash flow, but it's good support to have there. And pretty well helps justify the whole concept around the chloralkali plant, the chloralkali process.
And then, you're in Nevada, which is a mining-friendly jurisdiction. Where are you placed in the permitting process, and how supportive are the local communities of the project?
Well, in the permitting process, we have not yet entered the NEPA EIS stage. We have waited for the feasibility study to be completed. That gives us the layout and the scope of the project. The reason we added that phase 3 to the project was first to show that there's a potential scale of this, which could get bigger and bigger. Secondly, it was to show what the actual footprint and design for that scale of operation would be on the ground. And that's something we use in our permitting. We're going through the permitting process in terms of baseline work. We've done virtually all of the baseline work has been completed. We submitted reports to the agencies, the Bureau of Land Management, and now we're ready to get on to the next step, finish off a plan of operations, and then kick off a NEPA process and try to carry this in through the permitting phase and get to a record of decision, get all the operating permits that we would need to do the whole project. So yeah, we're moving that direction. It's going along very well. There's no real obstacles that we've identified on the ground in terms of flora, fauna, archaeological sites. It's almost a brownfield sort of development, being next to Silver Peak in the valley there. The local communities are dealing with a lot of mining interests right now. Tonopah and Goldfield in particular are looking at lithium projects, the solar projects, some gold and silver things in the area. And so they're a bit cautious, I would have to say. I'm not seeing who's going to come out of the pack and actually develop a mine in the area. I'm hopeful that we keep our relations going. We have good relations with the counties and state development, economic development people. So hopeful that we carry that through and that we have a good response as we bring this closer.
Okay, well, great. Thank you very much, Bill, for introducing the story to our listeners. And we look forward to tracking the company over the coming months and having you back, later in the year for some updates.
Great. Appreciate the time, Howard. Thank you, Rodney.
Okay, take care.